evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening. How y'all doing? Hopefully everybody doing well. Hopefully everybody is doing well. Before we get started, I would like to thank the people who are reaching out to me via DM, because you all helped me identify a glitch in the matrix. You all helped me identify that there were people who had access to the Discord and was not paying for the Discord server. Thank you for all of the DMs, because y'all helped me identify a glitch in the matrix. That glitch has been fixed. Please don't DM me and ask me why you can't see certain channels anymore. You were not supposed to be able to see those channels after that workshop that you purchased was over. I just, I moved everything over to an automated system on WAP, and I didn't remember that with the one-time purchases, it doesn't remove the restrictions from the Discord server. And the bonus access that I was given during that time, I forgot to take it away. So I found out that I had quite a few people that had been living their life like it was golden in the Discord server, soaking up all the gems, all the game, all the pop-ups, all just living life in the server for free. And thanks to not everybody, now don't take this as I'm talking about everybody that was DMing me, but there was a few people DMing me that felt like they were owed something, felt that they were not getting what they had paid for, while all the time taking advantage of something that they never paid for. And when I saw that, I said, oh, let me fix this. I'm talking about months and months. I can remember the last time I did any type of workshop or boot camp or anything. That's been a long time, right? If you know, it's been a very long time. I think the last thing I did was the Asian Assassins. We did the artery and price action mentorship. We did something, and then we did a boot camp. We did artery price action, we did a boot camp, and we did the Asian Assassins. That was the last thing I did, and that was a long time ago. That was a long time ago. So I'm talking about months on months on months, just up in there soaking up all the good game for free. And hey, they say when you start to get greedy. Now, if they would have just stayed quiet and not said nothing, I wouldn't have been none the wiser. I wouldn't have even known that they was in there soaking up that good game. Because it ain't often where I just go in and check to see what levels, because I got the different tiers broke down. I don't go in and say, hey, who can see this channel? Who can see this channel? I don't go in and look at all of that. If somebody got greedy and then messed up the church's money. Now, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Arania Grande. That's just big spot of hablo español. And you're in tune to another episode of the Intraday Price Action Recap. This episode of the Price Action Recap being brought to you by the Smart Money Manuscript. What is the Smart Money Manuscript? The Smart Money Manuscript is your one-stop shop, everything that you need to help you along your trading and investing journey. 19 videos and 19 quizzes to test your knowledge on those videos. And it also comes with the Smart Money Mentorship, where every second Saturday, you get a chance to meet with me live inside the live stream channel, inside the course, and ask your hard-hitting questions. Yep, that's right. One payment of $69.99 gets you all of that. First link in the description below. Take advantage of it, man. Now, we ain't got nobody in the Zoom tonight. I'm in the Zoom by myself tonight. I see Here to Learn and Share over there in YouTube land. And I see Honey over there in YouTube land. That's all I see. So that's all I'm going to say. See more numbers than I see names, but hey, that's all I see. So that's all I'm going to say. Y'all do me a favor, man. Press the like button. If you ain't subscribed, all the stuff I'm supposed to say. All right. Let me do this over here, and we're gonna get started. Somebody said it's 3 of us in Zoom. Why I can't see you? Oh, y'all hiding back there in the back. What's going on? Michelle Tucker. What's up, Michelle?
Yeah, we in here.
I see Seawalk. Y'all was hiding in the back. I couldn't see y'all. Y'all was behind some stuff. Somebody just typed that in the chat. It said, yeah, I was tucked off in the back. I couldn't see. But it's like I got multiple windows open, man. Let's go ahead and get to it, man. Did Price do anything today that caught you off guard? Today was a high resistance day. High resistance. High volatile, high resistance day. It was. High resistance, high volatile. But Tim, what do you mean by high resistance, high volatile? Somebody give me the characteristics of a high resistance day. Somebody give me the characteristics of a high resistance day.
Overlapping candles.
Yes, that's one characteristic. What's another one?
Deep retracements.
Deep retracements and overlapping candles. Did we have deep retracements today? Did we have overlapping candles? Yes, we did. Yes, we did. What's the difference between a high resistance day and a seek and destroy day? What's the key difference? Talk to me. Don't get quiet now.
Is seek and destroy when you keep taking liquidity on both sides?
Yes. Seek and destroy is pretty much a consolidation that takes out the buy side and sell side repeatedly. It's not leaving the range. It's taking buy side, it's taking sell side. High resistance, it's gonna continue to take liquidity on one side of the market, but you're going to be coming all the way back to that initial order block or coming all the way back to that rejection block. You're going to get those deep retracements, but you are going to basically be sticking to either a bullish or bearish narrative overall, but it's just going to have some really deep retracements. And the reason why I say it was high volatile is because the throws were massive throws, hundreds and hundreds of points on the NQ, right? So very, very high resistance day to day. A lot of people, they mistake high resistance days for seek and destroy just because it's going up and down. Just because it's going back and forth, don't make it seek and destroy, right? Just high resistance. Or they be too zoomed in. You're like, oh, we're in seek and destroy. It's taking buy side and sell. You're just too zoomed in. Well, you're too zoomed in. If the higher time frame has a reason to go up to somewhere, what do you expect on the lower time frame for buy side to take out what? I mean, for the lower time frame to take out what? Now that I didn't gave you the answer. If the high time frame got a reason to go down, what do you expect the lower time frames to take out?
Buy side liquidity.
That was for the first one. Now for the second one,
Oh, okay.
if it got a reason to go down, what do you expect the lower time frame to take out?
Oh, sell side.
Yes. So if you're zoomed in on a 15-second chart and price go up, take out buy side, and price go down, take out sell side, you're like, oh, we'll seek and destroy. No, we're just in a high resistance condition on the higher time frame. It's not seek and destroy. You just too zoomed in. You don't know what's going on the higher time frame. So we want to make sure we understand that we call ICT things by ICT names. Just like we want to always call Bible things by Bible names, call ICT things by ICT names, right? Let us not just willy-nilly throw names around. Let us not call a dealing range a if to look back. Let us not call a market maker model a power of 3. Let us not call the price engines price delivery. Let us not call price delivery let us not call buy side delivery buy side liquidity. Let's call ICT things by ICT names. Y'all get it? Y'all feel me? Y'all understand? Y'all know what the importance of that is? Right. You know why that's important? Who can tell me why that's important? And not just because Michael said so. Tell me why that's important. Why is that important?
I say so we can communicate effectively and know, be talking about the same things.
Yep. And not just with one another, with yourself. You want to know, why am I looking at this range? Why am I looking at this PD array? Why am I taking this tool out to anchor it to this? Why am I drawing this box around that? If you understand why you're doing what you're doing, now you can effectively engage with price, right? But if you're looking for a power of 3 and you're focusing on if the price delivery, right? Yeah, does the power of 3 show up in if the price delivery? Does the power of 3 show up in a market maker model? Does the power? Yeah, it shows up in these things, but you want to understand, why am I looking at this? Why am I grabbing this tool? Why am I calling this that? Right? If you understand why you're looking at something, or why you're doing something, or what you're doing, now you understand exactly how to engage with price, and you can start to develop repeatable models. You can start develop repeatable models. Okay, I have a model that's based off the power of 3. Right. And I understand that the power of 3 entails accumulation, manipulation, and distribution. Now that I clearly understand that, I can form a repeatable model based around the 950 to 1010 macro window based off the power of 3. I can develop a repeatable model from 7 a.m. into 9:30 a.m. based off of the power of 3, right? I have specific time windows where I'm looking for a specific thing to happen, and I can engage if I see it, and if I don't see it, I don't engage. I have specific criteria that need to be met before I jump into action. You know what I'm saying? That's why it's important to call ICT things by ICT names. All right. I understand why I'm calling this an inversion fair value gap. I understand why I'm looking for that to act as resistance. I understand why I'm looking for it to act as support. I understand why price will draw back to that. Right. So I don't see nothing in the chat, and I don't hear nobody saying that. So I'm assuming everybody knew exactly what price was going to do today. And with that, we can call it. How many people clutched their pearls just now? How many people? How many people clutched their pearls? Deborah, Deborah, what you doing over there on YouTube? Why you on YouTube, Deborah? uh, don't be blaming my partner. Oh, real quick, before we look at the price, I was in the I did the pre-market analysis inside the I Stay Popped Up channel this morning. Right. So it was like a pre-market analysis for everybody in the Discord, minus the people who I found out shouldn't have been having access. But anywho, I digress. Starting in January, we are going to implement where on Mondays, not every Monday, unless somebody, you know what I'm saying, volunteers, but on Mondays, we're going to have a member-led tape reading session where the member is going to share their screen and walk us through price for that time frame that we usually do. You know what I'm saying? Read the order flow, right? Just walk us through. What are we looking at? All right. However you want to run it. You ain't got to do it like I do it. However you watch price, go through, walk us through a tape reading session. Right. Now, we tried this before, and the participation was doo-doo. And we got 2 people to do it. Right. I think we got 2. If I ain't mistaken, we got 2 people to do it. Right. So I'm letting y'all know now. Get out your feelings. I don't want to hear you talk about I'm scared. I don't want to hear you talk about you ain't ready. Right. I need people to be pulling up. Right. I need people to pull up. I'll tell you, let me know you want to do it. We put it on the calendar. That's going to be your day. That's going to be your day to do the tape read. Right. So if this I think it might have been the when I'm thinking about it, I think it was before Jim even came aboard. I think it was even before Jim came aboard when I'm thinking about it. I know Jim used to pull up and give his like analysis of what his pre-market analysis, but like what I'm thinking back to was when we was actually doing the member-led tape reading. I think this was before Jim came around. But Rhonda did it. I remember Rhonda did it. I think it was 2 people. I remember Rhonda doing it, but I think 2 people did it. But we're gonna need that participation, right? Cause we sprinting now. Right? I initially led off with, hey, are y'all ready to lead a nest in 2026? All right. Are y'all ready to lead a nest in 2026? And we had people that was like, hey, I'm not ready to lead a nest, or for reasons of I just ain't ready, or for reasons of, hey, I just like the community. You know, so I like the camaraderie that we got here. We like a family, whatever it may be. Right. But we sprinting now. So it's like, I don't want to be that crutch to you. I don't want you depending on me. Right. Because the good Lord want to call me home to glory. What you gonna do then? Right. I don't want you depending on me. So we got to start doing this stuff. We got to start doing it. Right. As a mentor, I got to give you that little nudge. Right. Got to give you that nudge. Okay. So starting in January, get ready for it. If y'all don't pull up, y'all already know how I get. Y'all don't pull up and start participating. Y'all gonna make me just kick you out the nest. Ready or not. Ready or not. Sprinting like a turtle. Hey, slow and steady wins the race. That's what the tortoise told her here. Slow and steady wins the race. All right, man. Let's look at this price. After I take me a sip of high quality H2O, it's a daily chart that I'm looking at here. Where did we say we was at this morning? We said we was in between what? Burp. Where did we say we was at this morning? On the pre-market analysis.
Between the daily fair value gap.
Yes. And where are we right now?
Still it?
Still there. Still there. Right. Middle of the road. Still there. Did more what I say. When you in between opposing PD arrays like that, especially on the higher time frame, but when you're in between opposing PD arrays like that, there's nothing wrong with what? It's perfectly okay to do what?
Sit on your hands.
Sit on your hands.
Sit on your hands. Sit on your hands and wait for what?
For more confirmation and what price is gonna do.
Yeah. Sit on your hand and wait on more information. Confirmation of what price want to do. That's the responsible thing to do. That's the disciplined thing to do. All right. When you can frame a draw algorithmically in both directions, is that high probability?
No.
Nope. Nope. So if it's not high probability, there's nothing wrong with not risking capital. Right? Are you wrong for trading in high resistance conditions? No. Right. Are you right for not trading during those conditions? No. It's about each individual trader and their risk tolerance for one, and their trader identity. Right. When you're trading inside high resistance conditions, you open yourself up to the possibility of being more probable to take a loss because it's a high resistance condition, and that element of manual intervention is there, and nobody can plan for the manual intervention. You can plan for the algorithmic delivery, but you can't plan for manual intervention because you never know when they're going to stop it just short of a high or stop it just short of a low, and then turn it back around and send it all the way back in another direction. You can't plan for that manual intervention. So you're opening yourself up for more of a higher probability of a loss. So if your risk appetite can't stomach that, nothing wrong with sitting on the sideline until you get outside of that. What do we say? Right? Until we break outside of one of these daily PD arrays right here, right? We're in between the tail of two cities. Okay. This city right here, right? That city right there is designed to send us down here. Right? This BISI right here now that we've come back down into it, or even before we came back down into it, once we created it, it's designed to send us up there. All right. So which way are we going to go? Oh, we're bullish. Really? All right. Look like we came back up to a premium to sell off. Oh, we're bearish. Oh, really? Look like we came down to a discount PD rate, and now we're starting to disrespect bearish order flow. We're starting to obey bullish order flow. Right? So if you can frame it algorithmically in both directions, it's not high probability. Right? Okay. You can still trade within this because the algorithm gives you little little fingerprints that it leaves behind, and you can trade on a lower time frame to take advantage. Because today, right, from the highest high to the lowest low today, 352 points and 352 and 3/4 points. That's from peak to trough. Remember I said it was a high volatile, high resistance day? Big, large throws from the highest high to the lowest low, almost 353 points. All right, just say 350 points for easy math. Make good money off that. With price moving 350 points, you think you can carve out 25, 30 points on a trade? Pretty sure you can. Right? 352 points. I'm pretty sure you can carve out 25, 30 on a trade. All right. Yeah. Today, right, we opened up right up here at 25,482 and a half. Right. We took out the holiday high. I just call it the holiday high because it was a combination of part of Thursday, part of Friday, right? That's why I'm calling it the holiday high. It ain't no special about a holiday high. I just don't want to say Friday high because it wasn't just Friday trading, right? It was just holiday trading on Wednesday night up to Thursday afternoon, and then Thursday night. Then we had some weird halt, and then Friday morning up to Friday afternoon. That's what this candle here consists of. All right. So we opened up, took out that high, traded down, took out that low, right? Failed to get the consequent encroachment of that Bessie that we created on Wednesday. Well, Wednesday is the Bessie date. We created it during that holiday trading, right? But Wednesday is the Bessie. Failed to get the consequent encroachment. Then we rallied back up and we closed above the lower quadrant of the SIBI. Right. During that holiday time, we had traded up and closed above consequent encroachment of that SIBI. Right. If you wonder why it's anchored up here at the body of that November 12th candle instead of the wick, is because there's a very small volume imbalance there. All right. Very small volume imbalance. And this wick does not exceed consequent encroachment right there. Now, if there was a volume imbalance on the bottom side, it would matter not how long this wick is. This wick can completely overlap like that. But if it's a volume imbalance there and a volume imbalance there, you will mark out that area as a suspension block. Okay. Okay. All right. Don't have an example of one like that to show you here, but y'all get what I'm saying. space there. Okay, y'all get what I'm saying. All right. 60-minute chart. All right. Here is that holiday trading. If I come here during the weekend chart prep, I explained to everybody why I was marking out my new week opening gap like this. And the reason why I marked out my new week opening gap like that is because this was the close for the last official trading day. All this right here is holiday trading. And then this was the open of the next trading day. So I was watching this as my new week opening gap. Now, if you want to watch it based off of what the candles are doing, right? Your new week opening gap would be from the close of this. Let me go here like this, go to 15-minute chart. It would be from the close of this 1 p.m. candle there to the open of that 6 p.m. candle. So it'll be a very small new week opening gap right here. All right. You can't even hardly see it. All right. It'll be a very small new week opening gap there. Okay. If you want to do it based off of what the candle is doing. But, and Michael talked about this in the past, whenever you have like a holiday, it's like the price is a little wonky. So you want to pay attention to both, primarily the new week opening gap based off the close of that last full work day to the open of the next work day, and also look at that wonky holiday trading. All right. So this is what we closed at on Wednesday, the last official day. And this is over here where we opened at on Sunday. You see here, we traded up, took out that high, traded up, poked above the upper quadrant of that daily SIBI. Okay. That daily SIBI from the 13th, and sold off all night long, all night, right? Came down here at the 8 o'clock open of the Asian session and took out all of this sell side liquidity that had been engineered, right? For when we first went into the holiday trading, right? Relative equal lows, rallied up, came down, took out those lows. Okay. Traded back up into that SIBI there, right? Came down to the lower end, this balanced price range there, right? And we came down and finally made the overnight low right there on this 1230 15-minute candle. All right. Rally back up, set relative equal highs there at 315. That was our London high, right? So we set relative equal highs there. And that looks to be somewhere around the lower quadrant of that new week opening gap. I don't have a fib for that. Yeah, I don't have a fib for that. So, very close to that lower quadrant, not quite there. And we came down here at 745, right? Created relative equal lows, right? So we have an important low here. Okay, got an important low right there. Created relative equal lows there. Then we came over here. That's at 745. Then this is our 930 open right there. All right, so our 930 open is here. So on our 930 open, we opened up, we took took out a short-term high there, traded into the low of the new week opening gap that I was tracking. Right? We came down, took out a short-term low, right? That right there is a bearish Judas swing, but then we immediately reversed and rallied up, taking out that high, closing above the lower quadrant of that, and taking out the relative equal highs. And we set during the London high. So we took the London high, relative equal highs, and then closed above the lower quadrant of the new week opening gap that I was tracking. Okay. And we also traded into the lower quadrant of the daily SIBI. Okay. Traded into the lower quadrant of the daily SIBI right there. Now, when price came up, took out short-term buy side, went down, took out short-term sell side, and then rallied back up above buy side again. Right? What signature is that? We talked about it on the live stream this morning. We said that gives us a what?
Wig snatcher.
It gives us a wig snatcher. And since it gave us a bullish wig snatcher, what do we want to see price continue to respect? What type of order flow? We want to see it continue to respect what type of order flow?
Bullish order flow.
Bullish order flow. And did price do that today?
Yes.
Yes, it did. And so was today a seek and destroy day?
No. It seemed like a respective order flow, took liquidity, and then consolidated.
Yeah, so we had a high resistance day. Why do I say that? Because after we got this wig snatcher, all right, well, first of all, here came up, very deep retracement there, right? Came up, got our wig snatcher, bunch of what? Overlapping candles. All right. Once we got our wig snatcher, we got a SIBI right there. Okay. So for low resistance liquidity runs, how far down should price have retraced here? Right there to that SIBI, if it wanted to go that deep and went back up. But where did price go to? All the way down into this bullish order block, all the way down here. Very deep retracement there. Once we got that deep retracement, we went up, went out again. What did price do? Come all the way back down and poke below the close of that order block, coming all the way down there, sweeping that liquidity under these relative equal bodies. I mean, we say relative equal bodies, there's liquidity resting there, right? Don't matter about this wick, don't matter about this wick, don't matter about that wick, don't matter about none of that. Because if you put this on a line chart, right, and put that's the wick there. So everybody focusing on that. Oh, that's where the sell side is. But if you look right here and you go over and you put this on a line chart, that's a low right there. See that low right there? We traded below that low right there. All right, candles. See, came down, traded below that low right there. See what that wick went to? That went right there. Let's do it with a line so we can see it good. Take that there, stretch it there. Right. That's how low price traded down right there. Come to a line chart that's below that low and blow it up, make it big. See that? Came down below that low right there and rallied back up and closed up there. Right. Looking at the line chart, what that look like? Bullish order flow. Right. What do we say we want to see respect? That low right there. We ever come back down below that low there on this line chart? No, we didn't. He even got a nose on here. Look how he got a nose on the line chart. I can smell now. I have a nose. All right. Uh-oh. I don't know what I just hit. That looked crazy. Okay. So we high resistance, right? Kept respecting bullish order flow after, right? Respecting our intermediate term low down there, right? Came down here, deep retracement, took out that sell side, rally up. Then we came all the way back up here and traded up into this SIBI right here from 6:30 p.m. last night, right? Right. And that SIBI right there from 6:30 p.m. last night. And then we traded all the way back down to the lower quadrant of the new week opening gap that I was watching, right? That's the new week. That's the difference between when we opened on Sunday and we closed on the last actual trading day. That's the area that I'm looking at. And we came down to the lower quadrant of it, right? And just hung out there at consequent encroachment for the rest of the day, right? Hovering right there at that 50% mark. Okay. And this right here is a fine example of, you know, you always want to be aware of the different little nuances that the algorithm is going to watch, right? Like I say, Michael taught on this a long time ago. Whenever you have a holiday, you always want to keep in mind the actual trading based off of the non-holiday time. If price is in that range, you want to remember these key things, right? Just like anything else. Now, if price had ran off and we was trading well below it or well above this area right here, yeah, I would make a note of it, but I wouldn't even be showing it on my chart right now because I'll be showing something up here or something down there that I need to be showing on my chart. But whenever price falls within the range of something algorithmic, you want to have it on your chart or be aware of, okay, we at this certain price. I'm looking to see what the algorithm gonna do in this range. All right. All right. Not just looking at this. Can anybody see any type of price sensitivity at these quadrants of this new week opening gap? All right. That if you go to a weekly chart, there's not even a new week opening gap there for that range that I mapped out. Right. But looking at this, can you see that price sensitivity based off of that? Why? Because that's the algorithmic time. That's a close from that session to the open of this session. That's what is that? Opening range, new week opening gap. Whatever. I mean, new week opening gap. All right. All right. Close of the last trading day, open of the next trading day on the next week. Right. Important levels. You always want to remember. Right. You always want to remember. Now, not only that we come to that here. There's this 6. And this one right there. Right. This is that little itty bitty here. Right. So that's when we close there. That little itty bitty time frame right there. That very small gap there. All right. Right. Trade up, whale up there. All right. Come back up to it again. Just around the high. Right. Trade back down to there. Rally up. Right. Don't take out that high. Respecting the wick there. Trade up. Don't make it back. The consequent encroachment of that wick. Then drop down. Right. So there is a little bit of sensitivity at that very, very small new week opening gap, right? Just based off of what the candles gave you, including the holiday trading, right? Then we come back down into the more significant area of price based off algorithmic trading, and we're just consolidating there at that consequent encroachment. And that right there lets you know, hey, I'm in sync with the algorithm as far as this area of price, because where does price tend to consolidate? At fair value, at that 50%, at equilibrium, at consequent encroachment, whatever, at mean threshold, whatever 50% you're looking at, that's where price tends to consolidate at. Right. And we can see that sensitivity of price at that 50% level. All right. All right. Makes sense. Makes sense. Okay. Okay.
Yeah.
Yes.
So that price leg up today, you probably have that busy right there
I heard
on this
Bissy right
last.
there. I heard Bissy right there. You talk about this here?
Yes. But
Okay.
because that price one run didn't take out buy side, would you still treat that as a high probability inversion since we did close back through it? And it's at 50% of that new day gap? Or that's what I'm starting to try to figure out. Or do we, I mean, I know we would still kind of
Mm,
recognize it, or do we look at it as not as high probability because that leg did not take out that buy side?
Not so much because it didn't take out the buy side, but more so because prices respecting bullish order flow. So I'm not looking for bearish PD arrays to sell off of. You see what I'm saying? So if we was respecting bearish order flow here, right? If we was respecting bearish order flow here, then I would be looking for a high probability inversion fair value gap to sell off of. But since price, right, we came down here and then we switched and started obeying bullish order flow, right? I wouldn't be looking for this to get below it and then become an inversion fair value gap. I would want to see price just like I was talking earlier. I said you want to see price this hourly biscuit. Remember, I came to this hourly biscuit right here. I said you want to see price just continue to claw through. I mean, Sibby, you want to see price continue clawing through this Sibby. You don't want to see this be treated as a Sibby. You want to see it just continue to claw through on this hourly time frame. Even though we got these long wicks, we can see these hourly candles continue to push through this Sibby right there. And now that we have closed back above it here, right? Now you want to see it be used as support, right? We still getting these very deep retracements, but we want to see it be used as support. Y'all hold on for a second. But yeah, so not so much, like I was saying, not so much because where were we at? We were on 15 minutes or 5. We was on 5.
You was
Okay.
on the hour talking about that.
No, talk about the one you was asking me about. Were we on 15 minutes or 5?
That was
What were we
that
on?
was the 15.
15.
And I
Okay.
was at, yeah.
Yeah. So, but yeah, since we looking forward to cut through this and keep going up, right? When we get here, I'm not looking forward to come back down below this and then use it as resistance because we're still, excuse me, it's respecting bullish order flow, right? It's respecting bullish order flow. So, when you're looking for the inversion fair value gaps, you're looking for it to play into the narrative of
you're looking for it to play into the narrative, meaning, okay, if um we're let's say, let's cut this off here, right? Like this. All right. So now, if we just say if we're bearish here, right? If we're bearish here, um, you, as we're coming up here, we're not so much looking for an inversion fair value gap here, like the one that's formed there. You'll be looking for this here to be your inversion fair value gap if you're bearish, because this is when we got our change in state delivery. And so now if order flow is still bearish, this is where I want to see price come back to the premium to take the short, right? So you're not looking for the inversion fair value gap here. You see what I'm saying? When you're coming back to the premium, you're looking for it over here. You get what I'm saying?
Yeah, that makes sense.
Yeah. And so, and that's when you're looking for an inversion fair value gap. Like, you'll have inversion fair value gaps all the time, just like you got a million change in the state of deliveries, you got a million inversion fair value gaps. So you're looking for the inversion fair value gaps, and you're looking for the change in the state deliveries that support the narrative and the bias, right? At the time. Not just, like I always say, we're not looking for everything everywhere. We're looking for it where it supports that on that time frame. And then if it's supporting it on that time, now if you're looking at it and say we're bearish and this is the inversion fair value gap we're looking at here, right? We're looking at that inversion fair value gap. So, and say price is bearish. So now once we get here, right, and we see the volatility, it gave a nice little move off of there, right? But if we were bearish, right, so at this time here, I was not bearish, I was looking for reasons to buy. But as we come up into this right here, if we are bearish, now this is a time where we could look for time frame confluence to see if there's, right, an inversion fair value gap on the 1 minute time frame that we can trust, right? So now if you, and this is how you want to do it. Like, just say if now you've refined this down to here, and this is your inversion fair value gap you're watching, right? Now, because you're coming into your higher time frame inversion fair value gap there, but you've refined it down to the 1 minute, but you know that this is inside of a higher time frame. So now that's why I have the faith to sell off of this 1 minute inversion fair value gap, because it's in line with it's in confluence with my higher time frame, and it supports the narrative that's going on. So now I can trust selling off this 1 minute inversion fair value gap. All right. But I'm not looking here for this to get below this and this to become an inversion fair value gap. No, I'm looking to sell off of that one over there. Right. Same kind. And this right here actually was a very nice sale based off that. Right. Come from just when you touch the inversion fair value, I'm on the wrong thing. When you touch the inversion fair value gap, if you sell off of that, right, you can see there coming back to the lowest fair value gap. That's 50 some points. That I'm going way back here somewhere. That at 15 to 25 points. By the time I got back down to that quadrant line right there, I'd have been gone, sitting somewhere eating lunch or something. But that's it. You want to identify which PD array am I trying to sell off of. You want to already have that mapped out before price even get there, right? Before price even get there. Now, there are times where, okay, you want to see how price react, then you want more confluence, right? So just say, okay, price is bullish right now. I want to see how it acts at this, inversion fair value gap, right? Then when you get there and you say, okay, look, we're defending the upper half of it. So now once we displace away there, get that closure, you say, okay, I'm just gonna go short here, right? Because we've displaced away, we've got a closure there below all of this. I'm just gonna go short because we're starting to break away from it. And now we're I anticipate us breaking back down at least into the discount of this range, because right, we've consolidated, right, expand, reverse, and now that we reverse, I'm looking for some type of retracement. It's giving me a signature that it's not trying to go above the upper half of this, and now we're starting to break down. I can just short here. Now this is a time where you're using this current price here to say, okay, now the price did this, I'm going to react, because this is the reaction off of that over there, right? When you're not selling off of that over there, but this is your key point where you want to sell at, then price gives you more confirmation, and then you act based off something over here. Then it can be something, you can either go to like a lower time frame, like a 15-minute time frame, say, okay, boom, we've created a fair value gap right there. I want to see this act as a breakaway gap. So once we create a fair value gap, boom, I can just go short there. And that's the same thing as when we came down and closed here on this 1 minute right there. You're doing the same thing by anticipating that to be a breakaway gap and getting short there, just giving it to above the breakaway gap to go down, right? But I don't know how I got off onto that, but hopefully that makes sense, and hopefully that was helpful. I'm thinking that's about it, man. 15-second. What about it? Why you got a 15-second question mark there? Why you put 15-second with a question mark? I take entries on 15-second chart all the time. Why you put that 15-second question mark there? What we say? Price is price. No matter what time frame it is. Price is price, right? But you scared of the 15-second? Oh, no, okay. All right. I said 15 minutes. Okay, 15-second. Yeah, you can go down to 15-second. All right. Anybody got anything else?
Hey Tim, if you look at that 7 a.m. candle, it's a 15-minute inversion fair value gap, and it's doing the same thing with the confluence with the it's in confluence with the 1 minute first presented fair value gap.
Talk about this sippy right here.
Yeah. And if you pull up the first presented fair value gap, the 1 minute, same confluence, like the one like up top.
All right. Map this out. Now you say pull up the 1 minute for the first presented for what time? What range? What time range?
1 minute. 1 minute.
No, I'm saying what time range? Like
Oh,
9:30,
it
nine
came in
thirty,
at
7, 7, nine
at
thirty,
the
8,
9:30, 9:30.
9:30. Okay. All right. So this is 9:30 here. All right. Let's go to 1 minute here. Oh, this is our 9:30 counter there. Okay. And then, all right. So here we start to break away out of here, right above there. So that's going to be our first presentation there. Yeah. So you got a first presentation. Yeah. So you're saying like the first presentation being in line with the inversion fair value gap?
Yeah, being in confluence, and it came back to the inversion.
Talk about over here.
Yeah.
Okay. Yeah. All right. Yeah, I see that. So we got that. So we got this here, right there. Yeah. All right. Yeah. So we got that there. Yeah, we came back down to it there. And then this is 9:45. Right. We got we got a lot of stuff going on there, but yeah, we did came back down into that inversion, came back down respecting that first presentation. And then also, all right, we come here, 9:39. Remember what Michael talked about with the first presentation? What else do he tell us to watch? With during the opening ranges, he said look at the first presentation and then also what the first what the first what the first opposing, right? So you got the first presented and then the first opposing between that 9:30 and 10 o'clock, right? Then he's like watch the relationship between those. Okay, so if we look at our first opposing right there, right, once we created our first presentation, created our first imposing, right? Took out that sell side and completed our wig snatcher, right? So we created this, created that, completed our wig snatcher, right? Used the first opposing, right, as an inversion, right? That's that first SIBI coming down before taking that out and getting that change in state delivery. Used it there, traded away, right? Then we traded back down here, right? Traded down into the inversion fair value gap, closed inside that first opposing, wick down, taking out that low, traded down into the inversion fair value gap, came back up, closed where? Inside that first imposing, respect what? That first presentation, right? Traded up, came back down, touched the high of that first imposing, right? Traded back up. Then once we came up here, we dropped back down into that inversion fair value gap right there after coming down, getting that change in the state of delivery there, after taking out that sell side, right? But if you look at the relationship between that first imposing right over here, acted as support to take price back higher. Ain't nobody tell me this stuff don't work. I don't care who y'all. Do that make sense? Do y'all remember me talking about the first presentation and the first opposing and during the different times, like 8 o'clock, 9:30, 10 o'clock? Y'all remember me talking about that when Michael was talking about that? Yep. Because remember I made a whole layout. And I told y'all I created a layout for the first presentations. Over here, I got like a bunch of first presentations inside there. Right. I ain't see right there. All these first presentations and first opposings, right? Got them inside there. And I just show certain ones, right? First bullish fair value gap, 10 a.m. opening range. First bearish fair value gap, first bearish 7 a.m. And then if they don't have an opposing, I just don't put it. But like here, I got the first bearish 8 a.m. opening range, first opposing bullish 8 a.m. opening range, right? If it created, it created. If it don't, it don't, right? But from 7 all the way through 7 through like lunchtime, I usually stop at like 10, from like 10 to 10:30. I don't do them after that typically, right? Sometime I'll come look at it in the afternoon. Sometime I'll look at it in the London. See right here, I got first presentation at 1:30 a.m. opening range from 1:30 to 2. Right. I come in, right, and look at it there. But if you never heard of that, hey, start looking at that. Looking at the relationship between the first presentation and them opening range. And remember, when you're looking at the first presentation for the opening ranges, you want to look at it based off of displacement, right? You want to look at it based off displacement, meaning, right? Just like here, right? Just like here, how we started to displace away from this area right there. And this, how this candle here is coming up there, reaching outside of this range right here, right? It's not just a little push up and stopping inside of this range. We're displacing away from it. So that'd be a first presentation for this opening range, right? You don't want to just go and look for a little fair value gap that's stuck inside the range. I can't even find an example right now because this right here is displacing outside of that, right? You don't want to look for something that's like inside, like here, like how we're coming down here. You want to be looking at this as a first presentation. If it's inside of a opening range, you want to look at once we're displacing outside of this range, right? We don't have to, like here, we don't have to, it ain't got to be on the outside of the range. It just has to be displacing away. See how we got that move away and we're closing up here above these bodies, trying to push above that high, right? It's displacing away from the range. So boom, you can look at that as a first presentation for opening range. Anybody got anything else? Appreciate you pointing that out. C-Walk got opportunity to go into, you know what I'm saying, a little bit more bounce to the ounce. All right, man. I don't hear nobody saying nothing. I don't see nothing in the chat. If this first time tuning in to Tim's Tidbits, you probably ain't here no more because we done been on here for a long time. But if you still hanging around, hit that like button for me. If you got something out of it, share it with somebody who you think might get something out of it too. You feel me? If you're not subscribed, go ahead and subscribe. If you interested in buying a course that can help you, you know what I'm saying, that no matter what level you are, beginner, advanced, intermediate, you know what I'm saying, stuck, got a lot of knowledge. I don't know, wherever you at, Smart Money Manuscript, $69.99. It can hit something in there for you. First link in the description below. And on top of that, you get the Smart Money Mentorship included with that $69.99 every second Saturday at 12 p.m. Unless it's a holiday or unless I'm off, pull up there and I answer your hard-hitting questions. Hey, man, until the I just say I got one new comment and there ain't no one new comment in there. Hey, man. So the next time I decide to get on Algorithm Internet and share my thoughts on this thing that we call price action, it's your boy. Oh yeah. I told everybody inside the pre-market analysis today, but for those who don't know, pre-market analysis is Monday, Wednesday, and Friday. Monday is just pre-market analysis, no tape reading. Wednesday, pre-market analysis and tape reading. Friday, pre-market analysis, right? Unless it's a holiday on Monday or Friday. Tuesdays and Thursdays, if I'm gonna be sitting down in front of the charts, then I'll pull up and do a pre-market analysis. If I'm not gonna be sitting down in front of the charts at that time, then I won't, right? Sometimes Sometimes I don't get on the computer right at 9 o'clock. Sometimes I just come get on the computer like at about 10:30. You know what I'm saying? Sometimes I don't get on there in the morning. I come look at it in the afternoon. So just on Tuesdays and Thursdays, I play it by ear with the pre-market analysis. But Monday, Wednesday, and Friday, right? Unless it's a holiday, we're gonna have a pre-market analysis inside the pre-market analysis channel. Okay. That's to help eliminate confusion for people. All right. All right. Hey man, till the next time I decide to get on Algo's the internet and share my thoughts on this thing they call price action. It's your boy, Timothy Roger Sr., aka Aranya Grande. That's just big spot if you don't have below Espanol. Y'all be safe out in the trading streets, man. I'm gone.